We were saying we have to
get some music.
get some music. We need everybody up a little.
Dance to walk up.
Thank you for the music. It's great to be here. I'll be your moderator. My name is Noor Sweid. I run a venture capital firm. It's called Global Ventures. We're based in Dubai, and we focus on Series A and B investing across emerging markets. But before we dig in and before we introduce ourselves, I want to take a minute to see how many founders there are versus how many investors there are in the audience. So if we can get a show of hands for founders. Yeah. Awesome. Thank you. A show of hands for investors. A show of hands for LPs. No? Okay. So now we know it's about half.
We can relax.
So it's about half-half. If you could each take a minute and just introduce yourselves, I think that would be great for the audience. Assia.
Me first? I'm Assia Grazioli. I'm a co-GP of Muse Capital. We're here in LA. It's an early stage consumer tech fund. Our secret sauce, and not so secret sauce, actually, our special sauce, is that both my co-founder and I have built cumulatively 30-year career in business development, more notably helping brands, Fortune 500s, athletes, sports companies. I'm on the board of directors of the Juventus Football Club, for example, and we've been building a network and helping early stage tech companies when they need it most, between seed and Series A, really strike those strategic partnerships that help them accelerate, most notably create scale and generate revenue. So Rachel and I built Muse Capital on that thesis, and we are proud of being supremely strategic on the cap table of our portfolio companies, and we help them all the way through.
Great. Sarah Shenton from Goldman Sachs. I sit within the GS Growth team. I actually previously came from a team that was called Principal Strategic Investing at Goldman Sachs, and we've merged all of the equity investing teams into one umbrella. But my primary focus was on earlier stage strategic investments, so primarily in the fintech, enterprise tech verticals. And the way that we approached investing, or we do approach investing, is understanding in a strategic capacity where we can add value and where the injection of funding is actually worth more than just the cash that we're providing to startup companies, where we can give better access to the customer base, where we can help in product roadmap development, especially for enterprise across financial services. We've spent a lot of time in market infrastructure over the past 2 decades, so those tend to be the arenas where we focus, or I personally focus on investing. The team more broadly, however, does cross 4 core verticals, so that covers both fintech, enterprise tech, consumer, and healthcare. So investments out of our team are across each of those, but we tend to be sector aligned so that we can really dig deep in the subject matter expertise and partner. We tend to sit on boards, we tend to lead the rounds, but go really deep in partnership with all of the companies we invest in.
Thank you.
Hi, I'm Hope Cochran. It's so great to see such a full room and that you're all here. It's all very encouraging, so thanks for coming. I'm a managing director at Madrona Ventures. Madrona Ventures is focused on the Pacific Northwest, so the Seattle and Portland region. We invest in seed and A-stage rounds, and we really pride ourselves on digging in with the entrepreneur from day one and going through their whole journey with them, and really being a partner with that entrepreneur through all the ups and downs. I've only been at Madrona for a few years. Prior to that, I've been a serial CFO, so I think I've done the CFO seat now 5 times. I've raised a lot of capital on that side of the table. So I feel the pain of the entrepreneur that's trying to raise the rounds, and it's been interesting to now flip to the other side. I felt like I knew it so well going in, but really seeing it from the lens of the investor has been really eye-opening. So, it's just, I feel that sympathy on both sides of the table.
Thank you. So one thing that I think we all have in common is we all believe that we invest in companies where we think we can add value. And I think founders hear that a lot. Every VC says, we're going to add a lot of value, we're going to get involved, we're going to help you a lot. Can you talk about a case study in your portfolio? So maybe one story where you've actually done this so founders know exactly what to look for.
Yeah, this is an interesting question for me, only because as the CFO, I got a little bit jaded. And I was like, really, I just want your money. Just full stop, right? And all this, you add value. Your money adds value, let's be clear. But, as I do think one of the things that you need to think about when choosing a VC that I am very aware of and cognizant of is that when you're getting that first seed and A stage round, you are choosing a partner to be with you for like 10 years, right? And those 10 years, and I know from being an entrepreneur myself, you will, all your messiness will show, right? You'll have ups and downs, and your bad behavior will come out, and your good behavior will come out. So really choosing a partner at that stage that you feel comfortable with and who can help you. And if they call you on the phone, you go, oh, I don't want to take that call now, right? It has to be someone that you view you can really work with for the long haul. When I think about Madrona specifically and the value they bring, number one, we are focused in the Seattle region. If you think about the Seattle region, we're very strong in cloud computing, AI, and very ingrained in the tech scene in the Seattle region. So we have core deep expertise and relationships with Microsoft and Amazon and all of those platforms that can really help a young company take off and gain access to those difficult relationships that are hard to come by. And more importantly, I think we are just fully committed to being with the entrepreneur through that entire journey.
Yeah, I would echo at least the engagement and how important that relationship is. Where I think about case studies that have gone really well from our side, we've been, as I mentioned, very active on the market infrastructure side of the equation. And when we think about fintech, finance, and leaning into how do you close those enterprise contracts in something that isn't a 5-year life cycle of contract, that's where we can bring a lot of value. So early stage, we have a few different companies that have come in. We've, in somewhat of a consortium style, partnered with other large financial institutions to help both inject capital and position them in seed stage of some of the network growth that becomes a self-fulfilling growth strategy. And so helping navigate those difficult closing of contract cycles has been something that we've seen a lot of value add just by the partnership. So it's less about, it is definitely about providing capital and providing the money, but helping make that money more valuable and being able to have that be more effective in driving towards revenue is something that we tend to focus a lot on.
Yeah, for echoing very similar beliefs, for us, adding value is very, very important. There's so much capital out there, and the best companies and the best entrepreneurs really do know that they have to attract the best talent to be able to help them throughout their journey. For us, previous to building Muse Capital, for me, for example, I was an early stage advisor to Spotify and the founder from when it was early, 40 executives to IPO. And one of the things that mattered most was, yes, of course, the capital that was injecting into them throughout all these years, but more importantly, the partnerships that allowed them to scale. So a lot of the work that I was doing for them was focusing on, they needed to exit out of Sweden and enter into the French market, for example, and we would bundle them into a partnership with Orange French Telecom. And seeing that and replicating those types of deals like the Coca-Cola deal and AT&T when they expanded into the US a few years ago, those are the types of deals that we focus on. At Muse, we can do, actually one example we can give is an example that you and I have both gotten into as an investment, which is Firefly. You probably see them all over LA, certainly all over San Francisco and New York. They're a digital billboard that sits over ride-sharing vehicles, so Ubers and Lyfts. That deal came to us from 3 phenomenal VCs, and they certainly didn't need any capital by the time that they reached us. The Tencent founders had invested, and SoftBank founders had invested, and Lightspeed. And when it came to us, we said, yeah, but what is it? Why are you coming to us? You already have everything that you need. And they said, well, they can't get the ads on those screens. And of course, that's hugely essential. If they can't get ads on those screens, then how are they going to prove revenue and scale? So we immediately invested, and within 3 months, we ended up generating them over $500,000 in revenue through global deal with WPP, exclusive deal with Tumi Samsonite, global deal with Amazon, Netflix, and a partnership with Coachella, where they were the exclusive partner of the Ubers. That allowed them to build out their sales team, which then allowed them to launch into New York, and then Google Ventures came on and took over their Series A. And then on top of that, when they did raise their Series A, Google Ventures wanted to take down the entire round, and Khan, the phenomenal founder, asked us, knowing that our background, knowing our network and our background, but more importantly also knowing that our LP base is very strong all over the world, asked us to help him raise $10 million of the 30 to be able to help him augment his scale and his growth. So Rachel and I went out to our network, and Rachel flew to Jordan and ended up raising from one of the lead investors at STV that invested in Kareem, which then got bought by Uber, so clearly highly strategic. And then I did the same for a large partner who invested in the automotive space out of Europe. And so for us, it's a great example because we're able to help in the early stages between seed and Series A to make sure that they could prove out what they were building. But more importantly, something that we very much care about is crafting the cap table. And for us, strategic investors are very much a big part of building your companies. And it's not just in your A, but it's more importantly how you raise your capital at the seed stage and pre-seed stage and where you're getting that capital from. So we love to be agnostic. We don't take board seats, not yet anyway, and that's purposeful because we want to be really friends with our entrepreneurs and be that agnostic partner that they can trust and give them real honest feedback on how their boards are running, who they should be extracting capital from, and so on and so forth. So I guess that's an example.
That's
there are many
example.
of those.
and I'm going to pick up on that. So when we invest, most entrepreneurs expect that we take a board seat, and when we say we don't, people say, well, that's very odd. And then to a lot of our LPs, we have to have that conversation. We say, we might not. It really depends. Yeah. And it depends what role you want to play. If I'm a founder and I'm thinking about who I'm raising money from, right, and I want to think about, okay, you're going to add strategic value, which you've all defined as revenue growth at this point. You're going to help me structure my cap table. You might help me a little bit with recruiting, and ultimately, hopefully, with exit pathing and getting follow-on funding. So that sounds ideal. Now, what are you looking for from me? So as a founder, what are some traits that you look for? What are some times where within 5 minutes you've been like, okay, when is this meeting going to end? Because there's just no way I already know. What are some red flags? And what are some things where you're like, I'm ready to sign within 5 minutes? What can people, how can they position themselves a little bit better? I'll start with you.
There's so many things. I mean, we certainly love a founder with a nonlinear path. Obviously, we would say that because we have nonlinear paths that we're very, very proud of. But that nonlinear path, especially if it's focused in the area that they're building, I think that's very, very important. Because by the time we invest, which is at seed, which is post-revenue, post-launch, we definitely want them to come to us with an understanding of the fundraising process and therefore coming with some interesting angel investors. They don't have to have raised a lot of capital, but they should have raised from very, very interesting investors that can help them throughout the journey. Obviously, the data and the numbers have to back up their vision, so it can't just be a gut instinct, which is difficult to do in seed, but definitely an understanding of the market that they're trying to disrupt and what they're trying to get into. In terms of things that red flags, I don't like mentioning too many red flags because there's a lot of magic and exceptions. But I would say a solo founder is probably one of the things that I am wary about. Again, we have some solo founders in our network, so it shouldn't slow any of you guys down to approach us. But a solo founder for us, we believe in teams. I know that Rachel and I are absolutely essential to each other to build Muse in the force that we are today, and that's the same is true for you in this room. But if we do invest in a solo founder, it's because she or he is surrounding herself and knows how to surround herself with the right kind of people to support what they're trying to achieve. But yeah, generally speaking, know what you're building.
Sarah?
Sure. So I think the know what you're building is huge, very important. But it's something that honestly I wouldn't underwrite as well. I think having a very clear grasp of what the narrative really is, what you're really going to market with, and what the value proposition is for that particular product, and an understanding of the entire kind of ecosystem around it is really important. And I think another undertone of that is the data to back it up. So very big on KPIs and understanding, they don't have to be particularly sophisticated. They generally aren't at super early stages, but understanding what are going to be the key measures of success within whatever the product journey is that you're embarking upon is super important, because that helps to really refine the strategy and orient towards a specific goal. I think the other thing, a common conversation that I have in a lot of discussions is an overfocus on the opportunity or the challenge that you're trying to solve, while kind of less focused on how you're actually going to solve it. And so making sure that, especially when we lean into things like, prop tech or any of these areas, there are huge challenges out there. You can quantify the amount of spend in any of these areas in astonishing fact-based patterns, but how are you specifically attacking that in a differentiated way is something that I think is really valuable. And those who have a particularly good grasp on their narrative and how they're entering that in a differentiated way from the other kind of 100 conversations around that particular area is super important. And so, making sure that you're confident in that and you go in with that same kind of passion and drive, but are able to articulate it very clearly.
Yeah, so I'll try not to repeat. Of course, I agree with all those things. The one thing that, number one, I'll say two things I really look for in a founder. Number one, am I looking forward to spending the next 10 years with this person? So, it goes both ways. But number two, and I really say this to this room because it's a trait I see when women founders come in, is just a big vision, right? And a big market, addressable market. That is something that we really look for. And as I piece through, like when I see women founders come in, I find that often their success metrics are a little bit smaller. So just go bold and go big and really attack a big market. So we love to see that. Yeah. And a red flag to me, and this might be my own pet peeve, but we are very sympathetic to the fact that this journey is not a straight line, right? And I think you said the non-linear founder. But when you start a company, things will go wrong. You'll pivot, you'll change. And we're usually seeing you really early in that journey. And if I get someone in there that just paints this really glossy, beautiful picture, I know that's not the case. Like, I've been there before, and my journey went pretty well, but we had a lot of rocks in the road. And so I like to know the real story, and I don't want things overstated. I'm very sympathetic to where you are in that path. And I just like to know that we can get to know each other on a real level. Great. Thank you.
I would add one thing, grit. I know we get that a lot, and we always see it. We read it in books, and we see TED Talks and all that kind of stuff, but it's tough to raise money. It's tough to build your own business. You get more no's than yeses. And the biggest failure of founders is just not being able to stick with it, because it's such a tough, so the idea perseverance is everything. And so and again, especially when we get into them early, but it's also our responsibility to be there for you, to help you have that kind of grit and give you the support that you need. So it's really about building your village. But grit, 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 it's definitely not just a book or a TED Talk.
Definitely. So on grit and on other things, and something you brought up, as an investor, we're very privileged in our positions to be able to see all these different founders. And in my experience, and something we were talking about earlier, there are several differences between female and male founders. And so when we take a look at statistically, why are females getting a lower percentage than males in terms of funding and so on and so forth, and we've developed kind of a framework to work with a lot of female founders. And one thing that I'll bring to the table, and then if we could all share kind of what we've seen, is, for example, if we work with a founder, we say it's too early, or no, or it's not for us. A male founder will, and here I am generalizing, a male founder will generally send us a monthly update that is incredibly exhaustive about every single step of their business and probably what they did every single day for the last 30 days. And we'll get that from every single male founder who we've passed on. I have yet to receive that from a female founder. So that's one thing where we're like, when we say no to females and they just go away, and we've said, okay, well, maybe come back for your Series B, they will come back for their Series B. And it's like that Harvard study that everyone's read about, where women will only ask for promotion if they check all the boxes, and men will do it if they check 60% or whatever the numbers are. And we've seen the same thing in the fundraising process. Women will come back exactly when you've told them to come back. when they've met all those criteria. Men will come back every month with an update. And so it's one thing where we're trying to coach the women that we work with and say to the females, even if they say come back for your Series B, it means please update us every month. And that's one thing we found differently. You know, you earlier mentioned something else. Are there things that you found consistently or somewhat consistently that are differences between female and male founders that might help or might I guess, close that gap?
Yeah, I mean, I think one of the things I see common in discussions and conversations, I think, is a little bit to the go big. You know,
that's my big one.
Absolutely.
Go big.
Go big, go aggressive. Some of the best founders and CEOs that we've dealt with are the ones that they are taking over the world, whether you want them to or not. That's where they're going. They're not stopping till they get there, and they will tell you how amazing it's going to be every step of that journey. So go big. Definitely support that with an execution team. But I think the nuance I would associate with that is I've had some really great conversations where I've seen that glimmer of people really kind of understanding what that value prop could be or could look like. And then they almost buy it back or negotiate against themselves in a way that sort of undercuts and says, I know this could be here, but we're not going to go there first. Like, we're going to be really small and focused. And they're almost negotiating against themselves because they're kind of seeing or thinking that, or trying to predict the way in which I'll interpret that aggression as being a negative thing. And so I would say, two pieces of advice really is don't negotiate against yourself. If you're going to lay out a big statement, have the facts to back it up and understand where you're and how you're going to get there and how that's true. But don't negotiate against yourself until someone else comes and starts to challenge you. And even then, stay strong and don't buy it back. If you're going to set up a big vision, don't question it in the next statement. Make sure that you stay true to that vision and focus on how you're going to get there, not trying to reframe it in a way that you think someone else will digest.
Yeah, I think in general, this whole go big statement, comes from a place of maybe we tend to be more risk averse. And what I see with a lot of female founders that come in is they've bootstrapped it by themselves for a really long time. And then they want to take a little bit of capital to get them a little bit farther, but they're just not able to take that leap to take, maybe it's a bigger round to a bigger vision. Maybe it's just our core personality of being just slightly more risk averse. If you are starting your own company, you are embracing risk, right? It is one of the riskiest things you can do, and yet most rewarding, and such a great jumping off point. So that's what I see as a lot more risk aversion in the women founders.
I don't know. I think I must live in a bubble because we have 60% of our investments are female founders, and they're phenomenal.
Great. Amazing.
Thank you. And by the way, it's accidental because we're two female founders of Muse. Our associate Maria, who's right there, who's a beast, and then I mean that in the best possible way, and we're diverse as well. And our analyst is from India. We're all from all over the world, and he's a male.
Diversity.
Diversity. Well, Maria's half Taiwanese, half Italian. I'm Italian. Rachel is half Philippine, half British. We love international founders. For us, actually, gender and race is a non-issue. It's mostly really nonlinear paths and where people come from and cultural differences. So for us, I have to be honest, the updates that we get from the female founders that we've invested in are the best. And they're the ones that we send. We remove all the numbers, of course, and send it to other founders that we've either invested in or not and liked and want them to sort of keep sending us updates. They say, this is a good template, use this. So I actually think our female founders are extraordinary, but I do think that fundraising for a startup is its own animal. And it's quite unfortunate, and I say this as well as a venture fund we have to raise our own fund. I think raising money is difficult for anybody. It's its own language, it's its own understanding of people. It's a very interesting psychological, you have to understand the ecosystem, the investors who are in the group, who's investing in what, why, who speaks to each other, who's friends. It's not something that is taught in school. And I think women come with a great idea. They're able to communicate the concept and probably show their grit about what they're trying to build, but don't really know exactly what we're looking for. And I think preparedness is super important. You have to know what we invest in. When we invest in post-revenue, post-launch, so don't come to us with a pre-seed. Or if you do come with us for a pre-seed, let us know that you know that we don't do pre-seed, but that you want just for us to keep you on our radar. But we definitely think that part of our job is to, when we identify the pre-seed investments that we would potentially look forward to, the first thing we do is help them raise their pre-seed. We don't take a cut out of that. We just tell them, okay, you need to do these 3 things before you can raise a phenomenal seed round. But I think that we need to advise the female founders on how to operate under those circumstances, because raising money is tough, and it really requires another language that you weren't taught in school, and certainly has nothing to do with your day job, which is running and building your phenomenal business.
Well, and I think it also requires a lot of grit, like you were saying, a lot of resilience. I think that when we look at a lot of female founders, to your earlier point, you need to be very unapologetic.
Yeah.
And one example that just happened last week with us was on the same day we got 2 different pitches. Both were not what we do. So we do post-million-dollar revenue, but one was from a male, one was from a female. And I started having this conversation with my partner, and I said, the one from the male says, I know this isn't ready. I want time in your calendar to talk you through it and share my big vision. And the female one comes very apologetic. I know it's not ready. We're so sorry. We understand, with all of the caveats. And I'm like, okay, if I wasn't a little bit more, I guess, sensitive or mindful of the fact that these are 2 genders, it's very clear that I would just pass on the second one, whereas take the meeting with the first one. And he's used this half-baked approach just to get time in my calendar where he could pitch me for something where we're not even investing. But, so this is kind of how unapologetic, and it's not aggressive, it's just ambitious and assertive, I think, you need to be when you are fundraising. It requires a lot of grit, a lot of resilience, and it's a skill set that, does not come easily and takes a lot of time. So in closing, in 3 minutes, what are some, key pieces of advice as female founders here look to raise, look to come to you, that they can go home with that are quite tactical and on point? I'm not going to point fingers, but...
Yeah, I don't know if this is exactly answering your question, but I'll just say we've mentioned a few times the words grit, perseverance, resilience. Fundraising is hard. What that translates to is just don't underestimate how many no's you'll get, but keep going, right? And I feel like this is one of the hardest things for me, and going from the CFO seat to the investor seat, is I never really understood how many times I'd have to say no. We say no to 95% of the stuff we see. And we say no to 95% of the stuff we see, not because it's a bad idea, but because maybe it doesn't fit our fund strategy. Maybe it's not really meant for VC funding. I probably love the business, and I will tell you that. I will always be honest. But I have to say no a lot, and I hate that. And you all will have to receive a lot of no's, but it doesn't mean you don't have a brilliant, fabulous idea, and you only need one yes. So keep the grit and the perseverance and the resilience going, and you will find that right fit.
I think that's really sound and solid advice. It is a difficult and a very long journey. And I think one of the things that we've really focused on, especially with the female founder focus, so GS Launch is Goldman Sachs' kind of commitment to female founders. And that hasn't shifted our strategy. So our strategy does tend to be later stage, and it is looking at when you're scaling businesses, not just when you're seeding them. And we're not going to shift that kind of with regards to focused on female founders. But what they're looking at is they're looking at really leaning into how do you inject more women into the funnel. And so as much as I know everybody is after capital and not after coaching, trying to find those different avenues where you are more actively engaged in that funnel process, and where there's programs that you can kind of get that no, but understand great, I may not be a fit for you, but through your network, are there other institutions, funds, investors who you think might be interested in this? And can you introduce me to them? And so just because you get a no doesn't mean that you can't turn it into something that's very productive, very helpful for the next step. And so I think it's around finding that opportunity in each conversation and not kind of just walking away because the funding didn't come in that round.
I would say be prepared and be purposeful, and the grit will come after that if it doesn't come naturally to you. And I say prepared because there's less money out there for us. So we have to be better at in every single aspect of what we do. So you have to know your business better than anybody, the ecosystem that you're in better than anybody. You have to know how everybody else is doing it and try to disrupt it and do it better than everybody else. You absolutely have to be prepared. Be okay with the fundraising process because the no's you get are actually going to make you that prepared. And so definitely preparedness. In terms of purposefulness, I would say lead with conviction on the idea that you're building. And I say that again in the fundraising process. Prepare your cap table before you go out there. Dream up your perfect cap table. Say, I want Muse, I want Madrona. Put your ideal cap table together. Have a reason why every single person is on that cap table, a very smart strategic reason why they're on there. We need Muse for strategic partnerships. You need, so be very specific and then go out to the market and go to those funds and be purposeful to them and explain why you chose them to be part of your journey. I think you may not necessarily get all those yeses, but that preparedness and that purposefulness will come a long way, and that purposefulness and preparedness will certainly build that grit if you don't have it already.
And so I'm going to wrap that up by saying that we started here with everyone saying how they believe they add value to the investments that they make. When you're pitching investors, if you can tell them how you believe that they're going to add value, then you're telling them really what they want to hear, and that'll help you get over that hurdle. Because it really is, if you tell us, this is why we want you on board, it's not just your capital, you can also add a lot of value, and this is exactly where in my journey you're useful to me and where we can work on something together, then that always goes a long way. Thank you very much.